Hi guys, welcome to Investing with JYK, and today we'll talk about super cheap stocks in Hong Kong. So the first one is going to be Dixon Concepts. It owns a couple of brands. It's clothing, and I think it has it's clothing and watches. It owns Tommy Hilfiger and some other brands, but that's kind of irrelevant because it's like really cheap. So first, let's look at revenue. It's you know growing, and you can see the gross profit is growing, but the problem is that you can see the gross margin is declining, and their profit is almost doubled, mainly due to decreasing decreasing expenses really. So a little bit of decreasing the expenses, and they double their profit. Excuse. So, but that's not too important, other than to think about like to determine PE basically. But let's say next year they will make between those two numbers and take the lower number, say about something like 100 million, right? Let's say they just make 100 million or something, and then we can look at their market cap is 12. Well, they have the PE here 8. If they make 100 million, this is 1 billion, 1.2 billion. Right, so 100 million, that'll be a 12 PE, which isn't too bad. And then let's look at the asset. So let's ignore everything and ignore everything except just cash, right? So they have about 1.7 billion in cash. And then you go down, you check their total liability. Liability, you got the non-current liability, and then the current liability. Current liability is 797,971, and then you subtract the non-current part, which is 24,417 minus 25,272. You end up with about 907 million. These are thousands, and the market cap is only at 1.2 billion. So this is 100. This is actually 100 million. So 1.2 billion. So most of the market cap is basically cash. And you say, okay, so because it's all cash, then what about the cash? So the cash is actually getting paid out in terms of dividends at 7%, which isn't bad. So this is one that I thought might be interesting. Very low risk, very difficult to go bankrupt. And then a couple of things that we need to watch out for is this thing has a lot of related party transactions. And secondly, I haven't looked through the entire annual report, so I'm not sure if it has operating leases. But let's see, lease. Do they have leases? Let's see, depreciation, lease land holding. Okay, it doesn't say leased assets. Okay, under arrangement, assets that are held under lease which transfer substantially all the residents classified being as under financial leases. Do not transfer land held. Okay, so I think they probably include it. Whatever. But it was cheap, pays a large dividend. That's good enough, and it sells some stupid clothes, then people buy it. And if you look at their valuation, their earning goes up and down all the time. Very volatile earnings, but currently it's on the low side. And if you look at PB, including goodwill, it's also on the low side, but not as low as it was like 2009 in during the financial crisis. Right? So at the moment it's something like 0.5, which is cheap enough. PS is also on the low side. It's currently, I think it was 30 percentile, 33 percentile, and dividend is somewhat high. So yeah, where you're at 7, close to 7.19%. So that's not bad. That's one. So then let's go to the second one. This one is this guy, Costco Shipping International Hong Kong Co Ltd. There's another one that's very similar called Costco Shipping International Singapore Co Ltd. These are different companies. And that one has an ADR in the US, this one doesn't. So unfortunately, no, this one doesn't have an ADR. But here is, let's first, here, yeah. This is the assets, right? So it's in Chinese, unfortunately, but let's just look at this. This line says cash, basically. Well, it says a lot more than cash. It says liquid savings and cash equivalents. So that is 6.5 billion. This is 1,000 Hong Kong dollars, right? 6.5 billion, and then you just need to subtract the debt, which is here total debt minus 1,397,100, and then you end up with 5 billion. So look at that, that's 5 billion. And then if you look at their market cap, is 4.4 billion. So you can get this whole thing and some cash. You can get the whole thing in cash plus something for free. And it is also earning money. So if you look at their, this is the whole income statement. So you got increasing revenue, increasing costs, probably pretty bad gross margin. It's a shipping business. They cannot have good margins. And some random shit. And then, but let's say overall do they have anything else? Okay, so they have operating profit is about 200 million. And they also have some financial gains. 100 million. This is quite crazy. They're getting money for their cash, essentially. And total, they get $360 million in earnings. Say $300 million in earnings, right? And then their market cap is 4.4 billion. So 4.461 divided by 300. So that's a 15 PE. It's not, and we're taking discount, right? So it's not very low, but it's not very high either. And nice thing is it's paying a 6% dividend, and it's super cheap in terms of cash. The problem with this, again, is this thing is controlled by the Costco International, basically. There's a holding company, Costco holding company. And that thing might not have the best interest of small shareholders in mind, but they're paying a decent dividend out, so I'm not too worried. And yeah, so this guy, in terms of valuation, PE is not low, it's on the high side. But again, this is a cyclical business. You don't look at PE. Usually, you look at PB. So PB is somewhat low at 12 percentile, so that's not bad. And then it's at 0.5 PB, 0.56 PB. PS is also low, 15 percentile. And dividend is fairly high already, so it's likely that it will go down, but not because of dividend going down, but more because of the price going up. So that's what I think. And then the next one is called Emperor. I think it's called something like, yeah, Emperor Entertainment Hotel Limited. It has 2 hotels, one in Hong Kong and one in Macau. And these are the hotels. Reviews 8.4 and 7.8. So 7.8 is not fantastic, but 8.4 is pretty good if you're familiar with hotels.com ratings. I frequently travel, so I kind of know these things. And the location, right? Location is very important for the. That's one thing you can't fix. And this one's location, I thought it was pretty good too, but there's nothing in here. Anyways, so yeah. Price is around 200 to 150, something like that. Now let's look at their income statement. Its revenue is decreasing. Gross profit is decreasing, slightly less than revenue. And earning is, for some reason, increasing, but it's probably it's mostly because of the reduction in SG&A. You can see here the SG&A actually reduced by quite a bit, 60 million, and that more than offset the gross profit. This line is bogus. This line is really bogus, so you can ignore it. But the good thing is it's not a large portion of the profit. So even if you take that out, you essentially end up with something like 450 million. Right, so let's say they make 450 million per year. Their market cap is 2 billion, so 450, well, 2 divided by 450 million is 4 PE or something. Currency is a 5. Let's see. It's 2 point. Yes. So maybe I'm looking at. Oh, maybe they have a new report out already. But anyways, this one is from end of 2018. Maybe there's a new report out. And yeah, so it's fairly profitable. In fact, very profitable when you take into consideration of something else. So let's look at their asset. So you can see plant and property. So this is property, plant, and equipment. This is basically the 2 hotels, right? And that's what's generating all that profit. So the crazy thing is, with this, basically 1.2 billion, they were able to generate $400 million in earnings. It's quite amazing. And let's see, do they have financial costs? Yeah, they have a little bit of financial cost. Yeah, so it's quite crazy. Very, very profitable hotels, extremely profitable hotels. If you think about that, you're literally getting like 1/3 back a year. It's amazing. And then they have some stupid goodwill, but ignore all that. Again, you're getting a hang of it here. Ignore all that. Look at the cash. They have $3.1 billion in cash. Okay, so exactly how much debt do they have. So let's say, let's do the same exercise. Minus current liabilities, total liabilities, which is all these stuff, was 881,744, minus long-term liabilities, which is 111,012. Okay, and that gives you $2.1 billion. And the whole thing is worth $2.08 billion. So you get a very profitable company, two very profitable hotels, and a bunch of cash for less than the amount of cash. Now the caveat again here is related party transactions. For now, I haven't seen anything too bad. I looked at some of these. They gave the large shareholder like $8 million per credit per year to spend in the hotel, which is bad, but like whatever, man. It's they make 400 million, so okay, they spend 8 million. It's not insignificant. It is 2% of the earnings, so they spent 2% of the earnings on their largest shareholder. But again, as small shareholders, we get 5% dividend and a bunch of cash, and basically no chance of going bankrupt. Right? And then if you look at this in terms of PE, it kind of goes up and down all the time. And during the bad days in 2009, it goes to shit because it doesn't earn any money. And at the moment, it's not exactly low. It's 30 percentile. But if you look at PB, it's 20 percentile. And if you look at PS, it's like 45 percentile. And dividend, it's in line with history. I think it's like 50 or something, but 50 is percentile something, but it's in line with history. So I think this one again is very little risk in terms of it going bust. It cannot go bust. The cash basically provides a cushion. And then people worry what they're gonna do with the cash. Maybe they won't distribute all that cash out, which I think is highly likely. They probably just use that cash to buy a new hotel, and there's no guarantee that the new hotel is going to be as profitable as the old ones. But again, it's cheap as F. So okay, so I will try to keep looking for these crazy companies that are selling close to or less than the net cash value. So these are known as net nets in Benjamin Graham's lingo. And yeah, hopefully this is useful, and see you next time.